Hi, good afternoon, good evening, and good morning to everyone. So I believe you guys come in here for the Crypto 101, the art of technical analysis. So welcome to our podcast episode 30. My name is Queenie. I'll be the host for tonight. And let us start with our Crypto 101, the art of technical analysis. So these presentations I'll be actually doing to actually include this technical analysis, focusing on the application in the dynamic cryptocurrency market. So we will explore essential concepts like the chart patterns, indicator, and also some risk assessments and managements, equipping you with the tools to improve your crypto trading skills. So let us also able to identify entry point and exit point and navigate the volatility of cryptocurrency with greater confidence and precise. So actually, what is technical analysis? So it's actually involving a study about the past crypto market data like the price chart, volumes, and order book. So this data is crucial for predicting future price movement in many other cryptocurrency like Bitcoin and Ethereum. So by identifying crypto patterns, you guys can actually identify specific patterns and trend. So chart patterns like head and shoulder flags and or triangles can suggest potential buying or selling opportunity in the crypto market. So the importance of this it has actually allowed crypto market experience extremely volatility. So technical analysis offer tools like stop loss order based on support level, helping to limit potential loss from sudden price drop. So technical analysis also aids in identifying opportunity moment into trade, recognizing candlesticks such as some patterns such as bullish engulfing can signal ideal entry point for buying asset before the upward price movement. So and also data analysis empower trader to base decision on tangible data instead of acting on rumors. Investor can evaluate moving average and volume indicator to confirm the trend so that they can actually execute strategic trade. So there is a few types of technical analysis. So we will be touching on some of the analysis like support and resistance, trend analysis, and candlestick pattern. But today we'll be focusing more on support resistance and trend analysis. So what does this support and resistance means? So it's actually by identifying some key prices level whereby buying, which we call it as support, or selling, we name it as resistance, by the pressure is expected to influence the price action. So from the trend line, we can determine prevailing directions of the market, like uptrend, downtrend, or sideways, to align with the market momentum. So candlesticks and patterns actually allow to recognize visual patterns forming by candlesticks that suggest potential future price movement based on historical data. So by understanding the concept of support and resistance, this shows some psychological level. So it allows us to see traders tend to react emotionally to certain price level, leading to buying or selling pressure. So support and resistance level reflects the balance between buyer and seller at a given price as well. So how to identify support line with trend line? So trend line are actually valuable tools for identify potential support and resistance level. Support level indicate price point whereby buying interest can halt a decline, while resistance level shows that selling pressure might cap price advance. So by understanding this level, is a key to anticipate potential price movement. So like in the uptrend, the trend line typically acts as a dynamic support as the price retraces towards the uptrend line. Increased buying activity is expected, preventing further price decline and causing the price to bounce back upwards. A price below the uptrend line may signal a weakening of the uptrend. So later I'll show some example about the price break. Let us proceed on with the resistance level. So what does resistance level shows? So in the downtrend, the trend line functions as a dynamic resistance level. When the price attempt to rise upward towards the downtrend line, increasing the selling pressure is anticipating, hindering upward movement and causing the price to surge to break through. So a breakthrough above the trend line may also indicate a weakening of the trend line. So in simple said, support is the price level whereby buying pressure prevent further decline. And trader often buy near support line to anticipate a bounce. So while resistance is the price level whereby selling pressure are preventing further increase. So trader may sell near resistance level because they might expect a pullback. So let us take a look at this graph. So there is in the graph, there is a lot of potential possible resistance level and also possible support level. Just take a look at this level. So we usually, when we draw a support line level, we will actually line up all the lowest point of the graph, and this will be the support level. But if we go into further, it might have a support level over here as well, or even over here. So these are support level that actually can be break down into different timeline. So possible resistance level is when the price is going up and it couldn't continue up and it went back down. This is the part whereby a lot of seller is preventing it from going continue increasing, and it actually have a possible bounce back downwards. So it moved to a downtrend. So these are support levels. So it can be actually probably this line over here is also a possible resistance level at that time. So these are actually, we can actually plot the resistance level and support line by actually working on the graph that shows the data, historical data. So next, by analysis price action around support line, we can actually see there will be bounce. So when actually prices rise after hitting the support line or fall after hitting a resistance line, these are called bounce. And when we call it breakthrough, is the price actually breaking through support or resistance, signaling a new trend moving on. So there might be also fake outs whereby price just briefly break through the support or resistance line, but then it continue reverse into a different trend line. So this is a patterns of a trend line calling, we actually having some common trend line patterns whereby we actually just line up the resistance and also the support line, and actually we can actually see the some patterns are actually going on continuously. These are continuous patterns. We have a bullish rectangle, bullish pendant, rising wedges, bearish rectangle, and bearish pendant as well. So this, just imagine, many have expecting by seeing this kind of patterns, they are expecting the price there will be a breakthrough over at this particular resistant line. So everyone might actually purchase or make investment at this expecting to go on the moving towards the breaking through, but probably it can actually be a fake out and continue to go downwards on the moving towards the downtrend. So this might happen calling as a fake out. So that's why we will always require to actually plot our stop loss at every point while investing. So like this bullish rectangle, actually there is a continuous pattern going on, and we, uh, we are expecting it to actually break through the resistance point over here. So you can actually get your entry at this price line, and actually you can actually set a target when it continue to have a breakout. So these are a few patterns, popular continuous pattern that a lot of traders are actually looking out for. So this is the types of pattern that actually a lot of traders will monitor every single day. If you are a day trader or if you are a long-term trader, probably this might also be actually of use for you guys. So next, a common mistake trader make with support or resistance is by entering too early, jumping in before a clear breakout or bounce. So also they might be ignoring the volumes, failing to consider volumes as a confirmation factor, and also too reliance on support or resistance line, whereby there might be fake outs that actually causing you to make wrong decisions. So uh, while not ignoring other technical indicators and market factors also plays a very important part, because for technical analysis, we are not just looking at support and resistance. This is just to clearly understand the supply and demand of the cryptocurrency. So let us take a look from here. We can actually see that the price entry, probably when you put the entry level before it breaking out, some of the traders actually like to directly place probably a limit order, and probably it's too early to see it breaking through the resistance line. So that's why whenever you actually see a pattern towards whatever you are working on, you have to actually not to set your entry level too early. So while it's actually going uptrend, then you actually make your limit order. So next, let us take a look at trend analysis, whereby we use trend line to actually gauge the patterns. So by looking at upward trends, so the character are actually connecting all the low to form up an upward slope trend line. So this actually indicates bullish market sentiments and a potential buying opportunity. So people actually can trade just looking at uptrend, trend line moving upwards to make profit from it. And there is also a trend line that's moving downwards. Okay, so the character is by actually connecting the high to form a downward trend slope trend line. So this signal a bearish market sentiment, so a potential on selling opportunities. So there is also sideways trend whereby the price move within a range, forming a horizontal trend line to indicate the market is actually doing consolidation or indecisions, require traders to use range bound strategy to wait for a breakout. So let us take a look at the key feature of uptrend line. So an uptrend line is a straight line drawn on the price chart that connecting two or more lowest point. So the line actually indicates the directions of the price upwards over time. So uptrend must have a visible upward slope showing the market increased valuation. So it requires minimum of two distinguished swing low to establish, but it's stronger with more touching points. Okay, so upward trend line often act as the area to place buying order. So if the price break below the uptrend line, especially with significant volume, it suggests that the upward trend may be weakening or reversing, potentially leading to sell signals. So the key feature of downtrend line is the same by drawing two or more price high on a crypto chart indicating downward price direction. So for example, on Bitcoin chart, success lower high can be connect to form downtrend. So this line actually represents the resistance level as well, as price tends to struggle to break above it. As long as the price stay below the downtrend line, the downtrend is considered to be in place. So the key feature of a downtrend line usually slope downwards, connecting two or more highs. So by connecting more high indicated in the candlesticks, it's better, it shows more accurate uh, pricing, sensing it for downtrend. So trading implications, a downtrend line provides signal sell when price bounce off them. So trader might look for shorting opportunity near a downward trend. However, if the price break above the trend line, especially when increased volume, it may also indicate a change in underlying trend. This could signal a buy signal as well. So consider using stop loss just above the trend line to manage risk. And by working on trend line, we are actually need to take note of all the breakouts. So later I will show a graph to indicate how does it looks like for a trend line. So there will be also sideways trend line as well. So these are actually often showing indecision by traders and also investors, whereby they actually not able to make decision whether to buy or sell. So whereby buying and selling pressure are nearly equal to are nearly equal. So sideways trends are particularly useful for identifying potential breakout points where a significant price movement is likely to occur. So let's take a look at key feature. So sideways trend line are typically horizontal and only slightly angled, indicating a lack of strong direction movements. The price action should bounce between the upper and lower boundary of the range, testing this level multiple times. So trading implications, sideways trend offer distinguished trading opportunities. So these are whereby times people are looking at pricing a breakout above the upward trend line can be seen as a buying signal, suggesting the price may start an upward trend. Conversely, a breakpoint between the lower trend line can be also seen as a sell signal, implying a potential downtrend. So let us take a look at the continuous patterns. So this bullish rectangle actually shows a sideways trend. So this is a part where this is a point whereby a lot of traders see these patterns. They are expecting a breakthrough at this point. So usually entry level will start over here. So when it actually have a breakthrough, it will continue to go up. So this is the pattern of traders looking forwards to the breakout. Okay, so when we are looking at trend line, we have to also look at the time frame. So time frame can be drawn on different trend line can be drawn on different time frame. So each providing insight into the direction of the price movement. Understanding this time frame can actually help traders and investor align their strategy with appropriate trend durations. So mostly short-term traders, ideal for day trading, they are actually looking at 1 hour trade chart to 4 hour trade chart. So use this trend line, they will actually use the 1 hour and 4 hour trend line to actually identify short-term opportunities and capitalize on our intraday price movement. So, but be careful, be really cautious because it actually actually very high volatility. So second, a medium trade, whereby actually this kind of trader is suitable to actually look at the daily chart. Looking is suitable for swing trader aiming to capture trend over several days. So probably you might be looking at a day chart or even a monthly chart that you can actually do some medium term trade line. So this kind of medium term trade line can actually offer a balance between risk and reward, providing more stable signal over a short more than the short chart. So these are usually for the traders that actually look at near to mid and long mid term. So there will be actually also these long term investors that actually looking at the weekly chart and monthly chart, because this kind of chart actually is very suitable to identify major market trend. So this trend line helps in making informed investment decision and holding position for extended periods, reducing impact of the volatility from the short term. So let us take a look at this chart. This chart actually I extracted by using a 4 hour chart. So usually for short term or day trader will be looking at this kind of chart. So this chart actually shows the downtrend. This is actually a downtrend by actually looking connecting all the lowest highest point. So when we actually looking at the upward trend, we are actually connecting all the lowest price, and actually you will see a movement, a upward trend movement. So this is a part whereby people are actually purchasing it and waiting it for price to appreciate. So sideways are actually some price whereby it didn't break through and actually it holds on sideways. So whereby there is not a lot of price difference. So identify trend and patterns actually by looking at chart patterns like head and shoulder top and flex. This kind able the investor to actually make decisions, but this is not the only uh, chart that investor looking at. So these are one of them. So you also can actually looking at trends and pattern also can confirm uptrend with increasing volumes and downtrend with decreasing volumes. So there will be also algorithmic tools to actually able to deploy onto a chart. Okay, so like the MACD and also the RSI. So how does it look like? So these are the RSI to actually shows the graph whereby at this point is actually oversold and overbought, and over here all these point are actually undersold. So this indicator actually allows investor to have a price a target in mind to actually see whether the supply of the cryptocurrency, how what is the supply and demand looks like in the market. So actually, how to determine entry and exit point? So enter a trade when Bitcoin break above a resistance, uh, be it Bitcoin or any other cryptocurrency. A lot of investors are or traders are actually looking that the price actually break through, so that it's actually able to confirm an upward trend. So it's best to actually place your entry near a breakout, so that actually you can actually make looking forward to invest on to a upward trend. So also important to exit the trade at a predetermined profit target near a next major resistance level. So later I will have some graph to show. Also, always remember to, other than entry or exit, you must actually do a stop loss to place stop order slightly below a recent swing low to protect against unexpected price drop. So in any case, when you are actually expecting an upward trend, but suddenly the trend move against your predictions, you actually need to do a stop loss just in case you have a it will create potential loss for you. So let's take a look at what are trend line, how to use trend line for entry signals. So trend line often offer concrete entry signals for traders. So a buying signal arises when the price, after a temporary dip, finding support on an established uptrend line, indicating the likely continuous of a bullish trend. So conversely, a sell signal is generated when the price rebound off a trend line, downtrend line, suggesting a continuous of the bearish trend. So a buy signal is confirmed when, following brief pullbacks, the price kisses the uptrend line and then begin to rise back. This kiss indicates strong support and present a strategic opportunity for buy trades, and anticipating the resumption of the upward trend. So conversely, a sell signal is validated when the price, after a short live rally, meet resistance at the downtrend line and subsequently decline. So this encounter with the trend line signal and continuation of selling pressure, offering a tactical moment for sell trades, expecting the ongoing downward trend. So let us take a look the some bullish pattern. So when actually sees the bullish patterns, we have to actually, when you actually see these bullish patterns coming up, when you actually have this resistance level at the top and support level at the bottom. So this usually in creates a sell buying signal for traders. So they will actually have an entry level. So these patterns, bullish patterns, is called flag. So there is also another bullish pattern is called pendant, whereby traders see these patterns within a specific uh, candlestick in the uh, trading chart. It actually indicates for traders to actually buy above the resistance when after it break through the resistance line. Okay, so this is the string that I mentioned just now. So it actually named as the cup with handles. So actually when you actually see this kind of chart patterns, normally they will actually do a purchase entry level at the top of the resistance level over here. So there is also this ascending triangle. So there whereby all the connecting lines, this trend line with connecting lines for the resistance level, and actually connecting all the lowest point of the candlestick. When you actually see these bullish patterns, we call it as ascending triangles. Uh, Many traders will actually look at the entry level over here and actually make the purchase. So usually the stop loss will be indicating just right below the support line of this pattern. So there is also this symmetrical triangle whereby you connected all the highest point of the trade and the lowest point, and you see this pattern, you can actually do the purchase whereby you can expect a breakthrough over at this point. So measure move up, actually when you see a graph bullish patterns actually indicating a breakthrough on the resistance level as well. So you can actually place your trade over at the entry over here. So all these bullish patterns actually indicating a very good upward trend. So a lot of traders will actually look at the trend line that the patterns that is actually going, and is able to indicate an entry level over at this point. So there is also some bullish patterns called the three rising valley. So it is actually when you see three low bottoms, actually when you actually see this will actually continue to have an upward trend, and you make an entry level over here. Okay, so next let us take a look at some trend lines patterns that actually make it shows the signal for exit signal. So trend line are crucial to determine optimal exit point in trade as well. So for long positions, a clear sell signal emerge when the price decisively break below a established uptrend line. So conversely, for short position, a buy signal is also generated when the price breach a downtrend line. So if you're holding a long position, watching for the price to fall below the uptrend line, this often suggests the uptrend is weakening or reversing. So promptly an exit to secure profit or limit potential loss. So consider tightening stop loss order as confirmations. So if you initiate a short during when you observe the price rising above a trend line, this could also significantly shows a downtrend is losing its momentum, or there might be a reversing pattern. So indicating an exit to protect gain or minimize further loss is also very important. So evaluate covering your short position and potential reversing to a long position. So always look at the trend line for exit signal as well. So when you actually see the bearish pattern over here, this can be also signal you guys for a sell. So usually people will actually sell the positions right below this bearish pattern of a flag. When you actually see two perpendicular line actually move upwards. So this actually shows sell signal, moving downward trend as well. So when pendant actually moving downwards, we will actually sell it just right at the bottom of this support line. So if you notice, the bearish pattern is actually the very opposite of the uh, bullish patterns. So the inverted cup with handles is actually when you see an inverted downward trend. This also confirming a downward trend without a break breakout. So these people will look at this sell point at the lowest support level over here. Okay, so as the same measure move down, so also when you actually draw the trend line, you can actually see the patterns. You will actually do a probably when you see this set pattern, you can actually short the trade and actually you will be able to get more profit. Okay, there will be this three descending peak opposite from the three rising valley. So this also indicates the bearish pattern. So this time where I see the pattern on the bearish downward trend, a lot of traders will actually also look at shorting the trade. So let us take a look at the risk management strategy. So always diversify your portfolio, spread the investment across various crypto assets. This is actually to minimize risk exposed and protect against market volatility. Okay, so also determine your optimal position size. Calculate the position size based on risk tolerance and the account balance to avoid overexposure to any single trade. So also to actually set stop loss order to predetermined level to automatically limit potential loss, which actually can be triggered in the trading system. So usually you can actually put limit potential loss by actually putting stop loss in the in your trade. So this will actually able to protect your capital from unexpected downward market downtrend. So remember I've shared with you the importance of the how do we actually do the technical analysis. So this can actually allows by combining all the techniques like the support and resistance, looking at the trend line and also the candlestick patterns. You can actually combine all the techniques to actually enhance the risk management. So after looking through uh, the continuous trend, you can actually make some confirmation on the multiple indicator. All the indicator indicating is going uptrend, then you can actually make your decision by actually placing a trade, whether to short or to long. So long usually is buying it on the upward trend and short is on towards the downward trend. So after identifying the area whereby strategy can use overlap, so you can actually combine your trend analysis combined with the analysis over the support and resistance line looking from the system. Okay, so also diversifications combine on uncollateral strategy also can reduce your risk. So always remember to do a back testing and validations. So by gathering historical data, acquiring detailed historical market data include price, volume, and economical indicator. Uh, from the start 2018 till the latest probably 2023 or 24, you can actually able to look at the price trend, identifying the support and resistance line of the particular cryptocurrency. So always evaluate your performance by assess strategy performing using key metrics like the sharpen ratio, maximizing drawdowns, and average profit per trade. So by recording all your data, your trade data, you can actually look at how well you have strategized and predict the price movement of the particular trade. So always fine tune a strategic parameter such as stop loss level, and also put on your take profit target. So position sizing also to maximize profitable and manage risk effectively. So for now, we can actually also leverage on automated tools like the trading bots uh, or even the alert systems. So automate your trade strategy by implementing the bot program, which have a technical indicator like the RSI or the MACD. So backtest this bot using historical data to optimize their parameter in various market conditions. So this also can ensure consistent performing. So now the a lot of trading tools can actually use trading bots, and also you can actually set up a customized alert system. So to also alert yourself and receive real-time notification on potential trading opportunity. So probably when you actually have some strategy on a particular trade, you can actually set some order limits and also make some price alert to your systems to indicate when you are expecting to purchase at a particular price and expecting it to move upward trend. So you can actually also set the alert system to highlight to you when the price hit the uh, the indicated alert. So this will also to allow you to actually monitor the price. Uh, does it actually move towards does it have a breakout or fake out? Whether does it break through the support line that you actually expecting? So when you actually break through a support line, so it might actually allow you to prepare to whether to actually do some stop loss. So this you can actually set on your mobile device or even your trading account. So how do we actually look at the technical indicators? So these technical indicators actually shows records of the RSI relatively strength index. So this index actually shows how well the cryptocurrency is, whether is it oversold or whether is it having signals potential reversal. So later I will go through the chart to show you guys. So and also the MACD actually able to detect the trend line, a change in the trend line direction by actually observing the MACD crossover. So bullish when the MACD cross above the signal line and bearish when it cross below. So and it's also confirm the strength of the price movement by analyzing the volume. So a high volume during a price increase strongly suggests a strong bullish trend. So a low volume also suggests the weakness. So let us take a look at this chart over here. So this chart actually shows a MACD. So this MACD actually shows how does it actually reflect on the data from the existing current movement of the Bitcoin. For example, I'm actually using Bitcoin as an example. So RSI actually shows when the price indicated above, this line is actually above 70. This line, bottom line, is actually below 30. So when it's actually below, it's actually signal there's a potential reversal, which actually, if you guys notice this line, this actually shows the reversal. So when the lines is actually crossing up, it actually show a reversal of the potential upward trend. So when you actually notice, observe this RSI actually hitting towards the upward trend, it actually uh, reflects uh, on the RSI as well. So let us take a look at this ending part. Okay, so this actually is showing that the price is actually uh, crossing the more than 70. So it's actually a considered oversold condition. So it's actually also indicating the price might be also going moving downward trend. So this is how trader actually use the price, the MACD and the RSI to actually make decision on setting up a trade. So over here, this bottom line, you can actually see the volume. So over here, there is a volume, red volume over here. That means it shows a high volume of selling. And the green is actually the volume for purchase. So actually, when you actually start trading, looking at the trend line, actually to make yourself stay ahead of market development, always remember to monitor news from aggregators. Do regular check performance like from Crypto Panic or Coin Gecko for latest news and sentimental analysis. So you can also participate many online forums or even like join us during our podcast. We will also sharing updates on cryptocurrency weekly and also some update on the global market. So you guys can also join communities on cryptocurrency to actually identify emerging trend from the uh, moving when you are doing any strategies or any trade planning. So always subscribe through any news letter and also analyze all the you can analyze the leading expert on platform like TradingView or even YouTube's to actually understand more about the market sentiment or the market insight. So this also allow you guys to actually have a better understanding on the price movement of the particular uh, cryptocurrency you're interested in, because most of the cryptocurrency is actually interrelated with most of the major tokens like Bitcoin, Ethereum. So these are all affecting one another in the cryptocurrency world. So after mastering the technical analysis, require a multi-faculty approach. Combining chart and pattern with trend line can significantly improve your trade entries and exit. So identify potential support and resistance level also along the trend line to confirm the prevailing trend. So provide a robust framework for making informed trading decision. So remember to continue learn and also adapt to all the market changes are critical for sustaining a success in the crypto market, crypto trading. So I have come to the end of the lesson for today's topic about technical analysis. So hope you guys have learned a bit about how to look at the trend line and also how to look at the support and resistance line. So moving forward, I will probably share more on in depth with you guys on the rest of the crypto 101 with the how do we look at potential candlesticks. So hope to see you guys on our next podcast. Thank you very much for you guys to join me. I'll see you guys in our next podcast. Thank you very much.